You're a bond girl. In both senses, I have to say. Talk to us about why we care if you're not a Japanese investor.
Look, this move in Japanese bonds is really all due to this Treasury sell-off that has captured so much of our attention, not just this week, but just this month. We've seen 10-year, 30-year yields rise 50 basis points in September alone. That is pressuring this Japanese market, tempting the Bank of Japan to defend their yield curve control once again. I note that last time they intervened was nearly 10 basis points away from here. I guess the trigger for them was that 10-year JGB crossing 77 basis points. It only crossed 75 for the first time in over a decade yesterday. So this is really capturing the attention of the Bank of Japan. There has been a little move on the yen side, but I want to go back to what's been happening in fixed income, because Kriti, yesterday was a monumental day, not just for treasuries, but for what happened in gilts, for what happened in bunds. Intraday session yesterday, Kriti, saw gilts spike higher by 20 basis points, saw bunds spike higher by nearly 15 basis points. All of this down to the pressure of the Treasury market. There's really been no trigger for this, which I think has been the most concerning things for traders out there.
I mean, essentially the sell-off completely snowballing here, and it's going very, very quickly. Then you have to factor in what some of the central bankers around the world are actually saying. We actually have a little bit of sound, but I want to play it for you. Thomas Barkin, the Richmond Fed president, here's what he had to say.
Too early for me to know. I think there are a wide range of possible outcomes. You could argue for a resurgence based on the numbers we've been seeing. You could argue for a downturn, as you've been talking about. And you could argue for a return to the pre-COVID economy. I think all of those are in sight.
All right, so we heard there Thomas Barkin talking about potentially it being a little bit too soon to continue on that hawkish path. Is he in the consensus there?
Look, I think the thing that grabbed the market's attention yesterday was the comments from Goolsbee. He commented directly that this rise in yields might do some of the Fed's work for them. He was one of the first Fed members to actually say that out loud. There's been a lot of speculation that this rise in Treasury yields, how it's tightening financial conditions, might lead to the Fed to hike less or to drop that threat of an additional hike. We did see a rally in the front end yesterday. Those two-year yields moved lower by 4 basis points on these comments. But look, Kriti, consensus out there is that this Treasury sell-off still has legs. We actually heard from Bill Ackman. He had an interview with CNBC. We know that he is short the 30-year bond. He thinks yields were going to go higher, and he thinks that 30-year yield could go well into 5%. We crossed 480 at some point on one session yesterday, so he thinks there is legs to this Treasury sell-off.